want to talk about today is how to get started. All right. There's a ton of tips and tutorials online. There's an endless supply of information and a million articles you can read online. But really, what I want you to be able to walk away with is after watching this 10, 20, 30-minute video, you should be able to know what steps you need to take, how you need to think about investing, and really how to get the ball started, because that I feel is the biggest thing that holds people back. Analysis paralysis, too much thinking before they try to pull the trigger. They think you need to know everything about stock investing, and really, even the best don't know what's going to happen, right? Because you can do as much information and analysis and research you need about any stock, but at the end of the day, what determines the price of a stock is just supply and demand. How many people want to buy it versus how many people want to sell it. So that's kind of what I'm going to start off with. All right. So when you're looking at the stock market, what it actually is an entire compilation of every major public company in the United States or whatever exchange you're looking at. And basically what they did is that they took a percentage of their company, right, their company's shares, which is a fancy word of saying a portion of their company, and they make it available to the public. And you can actually purchase those shares and hold on to those as an investment. Another word you'll see for shares is securities. So you've heard about the stock market, you've heard about the NASDAQ, S&P 500, all this stuff, Dow Jones. So I want to help you guys understand it, contextualize it, maybe be able to participate in conversations and really get comfortable with that portion. Because if you get good at stock trading, you can really, really have an edge. Financially, you can definitely know where to allocate your money to be able to make sure you're getting a constant return. I really believe that my knowledge and foray entrance into the stock market is what allowed me to get to a point where I don't have to live paycheck to paycheck. I don't even have to worry about my bank balance. And I'm not really any different than the average person. All I did was spend a little bit more time researching, a little bit more time diving into the markets. And I want to just be able to circumvent that for you and give you the key critical points on how to understand it all. Okay, awesome, Tara. Glad you joined. Let me know if there's any questions that come up as we're doing this. But cool. So I want to give you guys, at least for the traders in the United States, some context on what the overall markets end up being essentially. And what I mean by that is what are the different indexes? So let's start. The most popular stocks that you'll hear about are referred to as like the Dow Jones or the Dow 30, right? These are the 30 largest companies. I want to make sure you guys can see them. It's a little light. I'm going to try to zoom in. Those are the 30 largest companies in the world. So examples are like 3M, Amex, Apple, Visa's on here, Walmart, Walgreens, biggest companies. And so whenever analysts on CNBC or so are talking about the market and it's up and down or the Dow Jones is up, they're referring to the stock price of the 30 largest companies in the world, essentially, or the United States at least. Right underneath that is the S&P 500, which is the collection of the 500 largest public companies in the United States. And then underneath that, there's stock exchanges, like the NASDAQ, New York Stock Exchange. And so the only reason you need to know this is because I want you to start understanding the world of finance. A lot of the times people get intimidated because they don't even know the basics. They don't know the terminology. And it just seems like a whole vast chasm of, intimidating space for them. But, finance professionals try to do that, right? They have their niche, they have their foothold, they're holding on to a secret, and they want you to pay them for their knowledge and their expertise. But really, you can, even if you don't choose to invest your money at the end of the day, you want to know generally what you're talking about to make sure that you're not getting screwed over by whoever you have responsible for your money. And in general, people need to take control of their finances, right? You probably do, honestly. Like, that's probably why you're watching this. You want to be in a place where you understand where to invest your 401k, your IRA, how to make sure that you're investing in the stock market at an advantageous point, and being able to get dividends from it or profits from it. I mean, the best thing about the stock market was the first year I started trading, I was able to make 30 to 35K profit on top of my losses. And so again, I'm not claiming that you're going to be making six figures or millions of dollars trading, right? But what this is from the movie Wolf of Wall Street, it's a benchmark for future earnings, and that's the key. You got to get started. You need to be comfortable with it. And then once I show you some of the tactics, you'll be able to understand that it's not really an intimidating beast. It's nothing out of the ordinary. There's a few key indications and things that affect the stock market. And really, at the end of the day, just human psychology. All right. What determines the buys and sells is solely individuals and human beings just like us. A portion of the stock market is being run on an automated fashion by quant traders and high frequency traders, and Wall Street spending billions of dollars on big data, but those are not the stocks that we want to focus. And why I don't really tackle stocks in the Dow Jones or S&P 500 too much. Those are bigger long-term investments, but if we're talking about swing trading or day trading, then you really want to focus on essentially what we refer to as penny stocks. And it doesn't necessarily mean that it's those scammy pink sheet stocks that you might have seen in Wolf of Wall Street or whatever stocks have those really negative connotations. It refers to, in my frame of reference, any stock under $5. Okay, and the reason for that is simple. Okay, because what we can do trading, right? Let me move this over. What we can successfully do is get small gains and losses on the market. And the reason for that is because on a daily basis, the stock market prices change. So the stock of Apple goes up or down 5, 10, 15%. And the reason is a multitude of stuff, what's going on in the world, what's going on in the country, what's going on in the company. But more specifically, the true reason why the price is changing is only because of supply and demand. The only reason Apple would ever go down is because people are selling it. And the only reason a stock price goes up is because people are buying it, right? So just contextualize and understand that. That is a critical thing, right? So before you even start analyzing the whole, stock market, you just have to understand those basic fundamentals that when the stock price is is going down, it's because everyone is selling. And when the stock price is going up, it's because people are buying. And our job is to figure out what side of the equation to be on to be able to make a profit. Okay, so now, as you can see, if you take a look at some stock market charts, which you can do on yahoo.com/finance, and I'll provide some of these links in the comments or in the video afterward. But even if you go on pennystock.com, you can see how the stock's prices change on a daily basis, as I mentioned. Now, the problem is, let's say Apple, right? It's trading at $1,000. Now, for you to be able to participate in the gains and losses of Apple, you need to buy a share. So that means you have to spend $1,000 to only have one share of Apple. And then you can have that money go up or down. Now, the thing is, these big companies don't have as much volatility. Volatility basically means change. Whenever I say that or whenever you see that, it sounds like a fancy word. It just means change of price. Okay, it's not really supposed to be intimidating. It means that there's a lot of change in price occurring. And as a stock trader or an investor or a day trader, whatever you want to consider yourself, that volatility is what we profit off of. And now let me explain why. So if Apple goes up to even 1,050, okay, that might seem like a lot, right? It went up $50, but you as an investor only made a small percentage on your money. For example, you only made on this 5%. So even though Apple went from $1,000 to 1,050, there's only a 5% gain on your money. And unfortunately, if you're trying to do that over the long term, that's not really going to change your life, right? An extra $50 isn't going to be that big of a change for you. Again, everyone can use an extra $50, but that's not why we're here. What our goal is here is to be able to make a sustainable $100 to $200 a day. Of $3,000 to $6,000 a month is very doable, and annually that comes out to anywhere from 60 to 80K in your first year. And so that's a reasonable expectation for you to have if you put in the amount of studying, the amount of research that you need to. And now let me go into how to do it. So let's say instead you buy a stock that's only $1 and it goes from $1 to $1.20. Now again, that's only a 20 cents change, a small variation, a small amount of volatility in the stock. But what happens there is that 20 cents is actually a 20% gain in your money. So let me explain this. If it went up, if you invested $5,000, which again might seem like a lot, and let me tell you, you don't have to start with that much. You can even start trading with $100, $200, $300. But if you were to put that money into this stock price, the one that went from $1 to $1.20, which happens all the time, that 20% gain, your 5,000 would become 6,000, and just in boom, you made an extra $1,000. And those are the types of exchanges and trades that we're looking for. That one stock that jumps up 20%. And if you go to yahoo.com/finance, and soon enough on In Penny Stock, we're going to have this on the homepage, you're going to see on a daily basis, there's a certain percentage of stocks that have the highest gainers, right? Yahoo Finance showed this. And you can see that there's always a multitude of stocks that went up anywhere from 150 all the way to 50%, usually about 4 or 5 stocks a day. So again, it's not, I think in total, if you look at the entire stock market, there's around 7,200 stocks. Okay, so less than 10,000, but still a finite amount. And there's only 5 or 6 that on a daily basis have this volatility 20 to 50% or 100%. If a stock goes from $1 to $2, which again, it's not that big a deal, right? If Apple or these big companies are trading at $1,000, they can go up and down in that variation much quicker. Let's see here. Okay, so if it goes from $1 to $2, though, you're literally doubling your money. And so our goal as traders, as day traders, is to find the 1 or 2 or 3 stocks that can do this jump. Okay, you don't want to worry about the other gains. Now, what'll probably happen is kind of similar to the mantra of like, shoot for the moon. Worst case scenario, you'll land on the stars. So essentially, when you're day trading and you're looking for these mass gainers, some people call them supernovas. Sometimes they're like pump and dumps. But essentially, while you're looking for these stocks that have these massive gains, you might find a stock that gets you a 10 or 20% gain, and that's still an incredible increase in your money, right? So again, if you're only trading with $1,000 and you come across a stock that goes up 20%, you still made $200 in that day. Okay, so the thing I need you to understand is the psychology behind the stock market and what we're looking for. Because once you know what we're looking for, these few stocks a day, then you know how to do the same process. And I think, honestly, this is probably one of the best ways to think about it. I'm really happy that I kind of framed it this way, because this is really the smartest and most effective way to think about it. Block out all the noise, interest rate, inverted yield curves, China, tariff wars. You don't have to worry about that. You need to just find those 1, 2, 3 or stocks that are about to go up a crazy amount in value and figure out how to find them. So let's talk about how to find them. Yeah, this is really going to be the fastest method that I've probably explained and broken down how to successfully trade. So the key thing is to know what criteria of stocks can fit the profile. And I'm going to go into it, right? Now, some of these words might be out of your normal vocabulary because they're stock trading terminology, but don't worry, I'll be able to explain them. And so initially, what we have to look at is a stock screening criteria, okay? Because like I mentioned, there is a ton of stocks out there, but we're not going to be looking at a majority of them, right? There's some basic frameworks that I set up right away. I don't look at any stocks more than $5. Why? Sometimes they might be good trades and I might know what's about to happen. But if I'm swing trading or day trading, I don't want to trade anything more than $5 because there's not enough volatility in there. It's not going to allow me to make the most bang for my buck. Because even today when I trade, I don't invest more than 3 to 5,000 per position. So I'm still looking for that, dollar to turn into $1.50, $2, which would literally almost increase or double my investment. So still an amazing place to be. Now, $5. The other key thing is to look at volume. Volume in this case refers to the amount of shares being traded for that stock on a daily basis. Now, the reason that's important is because that refers to your ability to find a buyer or a seller to give you the shares in the first place. So every day on the stock exchange, right? You might have seen in cartoons or movies where like those angry finance Wall Street people in the bullpen in the middle of the trading floor yelling at each other trying to buy and sell stocks, right? That's how it used to be in the past. Now everything is happening electronically and it's happening with the exchange that you're using. So if you've heard of TD Ameritrade, E-Trade, SureTrader, Robinhood, that's a very popular app that people have used. But all of these are different electronic trading floors essentially. And they have the ability to allow you to buy and sell a share. So you can literally, you download an app, find the share that you want of, let's say, REIT, which I'll go into detail in another video, uh, but REIT ABC, and you want to buy this, you can literally just hit on your app, find it, hit the buy order, and put in an order to buy. However, if there's no one in the world selling that REIT ABC, even if you're trying to buy it, you're not going to get it. And that's not the worst problem, okay? Because you're going to run into that in your trading career because there's just too much volatility or too much happening. And that's not the worst case scenario. What really is the worst case scenario, and the thing you need to worry about is, say you buy REIT ABC at $1, and now you did your research, you followed the steps that we teach, and you now see the stock is at $2. Boom! Look at that. You have just doubled your money. What do you want to do now? You want to sell your shares so that way you can actually lock in the money, get the cash in the bank. However, you go to put the sell order for $2 and you're just sitting there and nothing's happening. You're waiting, you're trying to see, is it lagging? But no, basically what's happening is that there is no buyer on the other end. There's no one that wants that share because there's not enough volume going on, right? So you need to find a stock that has at least 100K plus shares being traded on a daily basis, because that will allow you to be in a position where if you do want to sell, you can find a buyer on the other end. And so I found that to be a good ratio. And I want to kind of zoom into here so you guys can kind of get a better look at this. I'm going to find a darker marker next time. But that's generally the concept, okay? You need the stock price lower than $5, the volume at least at 100K. And then I take out a couple of variations. I took out any foreign companies, but I'm going to start looking into bringing those back because there's a lot of volatility in that. And if you start understanding the industry or the market, you can probably trade them. And then finally, the last thing we do is some technical analysis. Now, technical analysis is the concept of looking at the stock chart. You've probably seen a stock chart. Actually, let me just draw it out. On this side. But basically, a stock chart is a history of the stock and what prices it's traded at in the past. So you'll see different time intervals, and when you're looking at a stock price chart, you can actually see a multitude of different history. So you can see how it is in the last 5 years, in the last year, and basically it'll look like whatever. This is the price of it, right? So on the y-axis is the price, on the x-axis is the time, and every day you'll see a new stock price. But what I do is I do some technical analysis to be able to locate the range in which the stock trades. And if you figure out how to understand support and resistance, which we go into detail in the courses and stuff, that is how you'll be able to know when you should trade the stock or when to add it to your watch list, okay? Because support and resistance is basically the points at which the stock gets to and then for some reason doesn't cross because there might be too many buyers in place or sellers. And so say, looking at this, right? There's $1 here and $2. So for some reason, this stock never seems to get out of the range between $1 or $2. When it gets down to $1, imagine it's at these points here. Imagine this hits $1 too. It goes higher. So it touches $1 and then it always goes up. And then for some reason, every time it touches $2, it goes down. Now, there's a little bit more detailed analysis into it, but for the ultimate framework, you utilize technical analysis to understand the variation or the range within which a stock will trade. So then if you know comfortably that a stock is only going to trade between $1 and $2, it becomes a simple game. You understand the principles of buy low, sell high, and you really just take advantage of that. Right? So it's actually not any more complicated than that. All that happens now is that once you understand this framework, you have to look at what's going on in the stock market, right? In the macro economy, in the country, in the world, and that specific company, and start being able to figure out when the price is going to be high and when it's going to be low. And only a small portion of that can you feel comfortable with that based on news, right? You might sometimes think that if a company comes out with a contract of a great partnership, that the stock of the price should go up, right? Because again, as we talked about before, if people are buying the stock and people want it, then the price will go up. But sometimes the psychology of the stock market works differently. So that's one of the things I want to ingrain in. And as you get more comfortable with it and as you watch more of our videos, you'll start to understand that the stock prices are actually affected by individual traders or massive hedge funds and stuff, rather than perhaps the normal ebb and flow of what you would think a company would be like. Like it's not just that bad news means that stock price will go down. Here's an interesting fact. When a company actually does like a mass firing and cuts a lot of employees, that'll actually increase the stock price. And so even though you think, oh, that's terrible news, 1,000 people just lost their job. Well, for the company, that's a good thing because that just means their costs just got massively decreased because they don't have to pay the payroll for those 1,000 people. So then their profits go up, and that means that the stock price goes up too. So that's the type of psychology, is how the company is doing. So it's a little different than your normal thought process, but that is how you have to start thinking to be a successful trader, So that is the gist of it, Now the steps to start trading is twofold. Two things left, right? To actually open up a brokerage account, and that's the name of the account that you use to trade. So, you have your checking account, where money just goes into and you use your savings account, which you don't touch. And then you have your brokerage account, which you should think of as your investment account. Okay. So you can open up your brokerage account just like how you open up those other accounts. You go to your local banker, you call them up, and you sign up with them. A lot of the major banks have a corresponding brokerage platform that you can pretty much open up an account with. And so you can set up your brokerage account, and then that is pretty much how you start trading, right? The platform will have a generally software that you'll operate out of. And a very popular one these days is Robinhood. Now, Robinhood isn't the most extensive trading platform because it's literally just a mobile app. And so, you're limited to the functionalities of just your small screen. But again, I think the key aspect to get into investing is to just start, right? And the best thing about Robinhood is that you can set up a Robinhood account in 5 minutes right now from the comfort of wherever you are, your bed, your home, your bathroom, your commute, and you can get started trading in 10 minutes. And really, there's no risk, right? Why not just take 10, 20, $50, whatever small amount you're comfortable with, and just purchase a stock, a random one, a company that you like. Really, what you'll start seeing is that it's not that difficult. It's not that intimidating. And the more you kind of look at it on a daily basis, read the financial news, watch these videos, go through our boot camp, whatever you choose to do, you want to immerse yourself into it. Just like any other skill, right? If you want to get good at it, you have to put in the effort. You have to put in the daily studying, research, analysis, and after a while, it gets fun. For me now, I wake up or when I'm commuting or just bored, I'll look at these stocks. I'll look at the markets. I'll look at the news, and honestly, there's a whole thrill of making profit from the stock market. It's almost like statistic or more professional gambling in a sort, because there's levels of speculation, and a lot of people say, oh, you're speculating, or if you're just guessing, then it's not true investing. And that's not necessarily the case, because what happens at times is, let me zoom into here, is just this. You're pretty much using the normal advantages and understanding of the markets and the human psychology to win up the statistics that are in your favor. So it's phrased out a little odd, but you're trying to just increase the probability that you make a profit. So even the best traders in the world, Warren Buffett, the richest people, the top hedge fund traders, Ray Dalio, all these guys, they still lose trades at times, right? And the key thing is just two parts. When you're winning, to lock in your profits, right? Because even if a stock price is high, and say you've invested in 10 stocks, you have $20,000 in your brokerage account, they're all in the stock market. What people forget is that just because your stock account is high doesn't mean you're rich, because that is not actual money. It doesn't become money until you actually sell it. And remember, when you sell it, you're going to have to pay taxes on it. And I'm going to, that's in a video we can talk about that at another time. But the key thing I see is that knowing that you have to lock in your profits, you have to sell, you have to actually convert the share into cash. And so it's not actually a profit until it's cash in the bank. So remember that. And then the key thing on the other side is, so lock in your profits, and two, minimize your losses. All right. The only time people lose in this stock market game is they take too much of a risk. The stock price is not going in the direction that they thought it would. And for some reason, they keep hoping and praying that randomly the stock price will change. And even though the stock market is wild, if it's going in a certain direction, it's like, Newton's law of physics, what goes in motion stays in motion. And so that's generally how it'll end up. And so if any time a stock price is going against what you think it should do, that means that you didn't factor in something, and you should just sell right away and minimize your losses. Even if you lose 5-10%, that's still better than watching your account just go lower and lower and lower and wishing that you got out of the position earlier. So I hope that makes sense. I kind of went into the full scope of it, and I'm really happy because we went over the specifics. We went over what you should look at for trading, what type of stocks you're looking for, and now the key things are just finding the different tactics, learning the technical analysis, the fundamental analysis, understanding how to use your brokerage platform. That's key, okay? Because it's just like learning any new software at work, any new platform. You have to learn all the kinks of it. There's a lot of bugs. There's a lot of functionality. You want to understand all the terms and know what is available to you as a trader. So learning your platform is super important. And then finally, to practice trading without risking real money, I recommend paper trading. And basically what that means is virtual trading. You're just using fake money and you're deploying it in a real environment. And that sounds intimidating, but it's not. It's literally like you're playing a game. You're playing a stock market game. There's a lot of sites online. You can just Google it, virtual trading or paper trading. And it's a software online that allows you to set up a free account and you can pretty much practice buying and selling shares and looking at how your hypotheses are. And it's just fake money. And if you see that when you're doing paper trading and you're starting to win and profit and make money, then you can take some of your own money and throw it in into the real markets. Open up a real brokerage account and just start. That's really what it is. Once you start, that's how you can start profiting. And if you follow the method of, staying specific with your rules, staying specific with your stock screening criteria, then it can really help you minimize your losses and make a profit. Okay, so that was on a pretty detailed, specific, step-by-step case of how to get started trading. And I hope that helped. If there's any questions, now would be a great time. Gabby, Tara, definitely want to thank you guys for watching, Fareed. But yeah, this is going to be edited and set up. It'll be available for replay. So any specific questions in here, you'll be able to rewatch it. But any questions at all, I can kind of go over now. Yeah, what we're going to be doing is making this available only for the Penny Stock group. So the VIP essentially is a section or library of videos that I've made over the last 4 or 5 years that teach you step by step how to get started trading. So this was a high level overview, and I go into detail about each step on how to do it, what software to use, what resources to use, and you can do this yourself. I figured all this out through research, through manual trial and error. Started in college and was able to get pretty lucky with it. But then after I had a ton of losses, I started realizing what I was doing wrong and, what were the secrets to success. And it's just like any other skill. You have to reverse engineer what's right, understand it, and there's a system and there's loopholes and nothing illegal. It's all just understanding how it works and how you can profit. But yeah, hopefully this was helpful. We're going to be having these live classes for the Penny Stock VIP, which is a private Facebook group. So if you're watching this now, this was kind of a intro video, but if you want to have these on a weekly basis, have access to me and be able to get coaching, then definitely join the Penny Stock VIP. You'll have access to the Facebook group and these types of tutorials. We go a little bit more deeper and get free beta access to all the new videos and courses that we'll be working on. But yeah, this is the key. You have to put in the time. You have to take the commitment that, hey, I'm going to try to spend an hour or two a day understanding stocks, watching videos. There's a surplus of information online, and I highly recommend that you put aside, an hour, even 30 minutes a day, and really keep it consistent, because it's just like the gym, right? Once you understand the fundamentals of the gym or of being healthy or having a six-pack abs, it's very simple, right? You just have to eat less, and work out more, right? And that's on a very basic level, right? Same thing with this, right? It's some basic fundamentals. It's just the consistency and the discipline to do it, which is how you make the money. All right, awesome. Glad for that. Yeah, so we're going to be doing it on at least a weekly basis. For the people in the VIP group, you'll have access to it. So even after this live session ends, it'll be posted and saved onto it. So you'll always have an archive of these classes. And I'm going to be doing them 2-3 times a week, and also be dropping like tutorial videos actually on the screen, going over the stock market, trying to be as informational and useful to you guys as possible, right? What I want you guys to be able to do is be in the place where I am. I thank God, like I don't have to worry about my bank account. I don't have to, and a lot of my students are there too. And it's just a nice feeling because it opens up a lot of options to you. I'm not saying you're going to become a millionaire. I'm not a millionaire. Okay, I'm not going to try to flex or just, how people are doing on Instagram, just showing off their money. That's not the key of this. The important thing is that if you understand this market, you can get ahead. You can take control of your finances. You're working so hard, 40, 50, 60, 70 hours a week, and you don't know what to do with your money. And you might be using it in the wrong ways. But if you understand the stock market, you can take advantage of the money you're making and literally make money off of it. And these are general concepts that you've heard your whole life. You've heard takes money to make money, all of these kind of cliches. I'm just showing you how to take control of that and actually use it and apply it to your life. But yeah, hope you guys enjoyed, and I'll see you guys next time. Take care.